Namaskar. Let us today examine the impact of Iran-Iraq war and its consequences on Indian market and economy. The Iran-Israel war isn't just a regional conflict. It's shaking the foundation of the global economy. And India is right at the center of this storm. The Iran-Israel war has escalated into a prolonged conflict, driving up global energy prices and disrupting supply chains. For India, this means rising inflation, potential GDP slowdown of up to 4%, and pressure on critical sectors like oil, aviation, fertilizers, diamonds, and jewelry. The war in West Asia is no longer about oil and gas only. It is now affecting India's overall economy and businesses. Supply chains in many important sectors are under pressure. The situation has shown how much India depends on the import from this region. India relies on West Asia for crude oil and liquefied natural gas. A large share of non-energy imports also comes from this region. Much of this trade moves through the Strait of Hormuz. So the supply chain has also got disrupted. Several sectors in the country which are interlinked with each other are bound to face the heat of this war. Around 47.5% of India's diamond imports comes from West Asia. The region also supplies about 63% of fertilizer, 50% of polymers, and 48% of hydrocarbons. So any disruption in the supply are bound to affect the prices and the availability in India. If the war continues for long, these sectors may face supply shortages, prices could go haywire, and the industries that depend on these materials will be affected. This can also affect the business and the consumers for a longer time. Raw materials such as gold and diamonds are brought into the country. They are processed locally and then exported as finished products. A break in the import can slow down the production, and in turn, this can affect the exports, especially in the jewelry sector. Some sectors may switch suppliers to other countries, but this is going to take a lot of time, and moreover, these suppliers must be able to increase the production at their end. In the fertilizer sector, India depends heavily on nitrogen based fertilizers from West Asia. A long disruption can push international prices higher. This can increase the burden on the government. The government will have to shell out higher subsidies to support the farmers, and in turn, this will put pressure on the current account deficit. The Indian government is also trying to diversify its source of buying, that is, it is trying to buy from some other countries. It is also working to increase the production at home, but these steps will take time and they will lower the risk over time only. The impact of war is still developing and the quantum is still very difficult to assess. With the oil price rising, and if it continues to remain at an elevated level, this will deterrent the government to shift priority from growth to managing the current scenario and situations in the country. So now where are we headed? Which sectors will recover fast when the ceasefire happens? Now, when ceasefire takes place, the crude prices are likely to come down. LNG supply and prices will become stable, and this will ease the pressure on rupee. The inflation will also come down, making it stable. With the rupee becoming stable, the FIIs, who are continuous sellers in our market, are likely to return to the Indian market because of two reasons. Firstly, the stability of the rupee will bring confidence to FIIs. And secondly, the valuations, which are now at a reasonable level, will also attract FIIs. Now let us look into the sectors that will recover fastest. Number 1, the oil and gas sector. Peace in West Asia is like oxygen for India's energy ecosystem. As the crude prices eases and stabilizes, the refining margins of the oil companies will also improve, and the foreign exchange pressure will also reduce. The companies that will be benefited will be Reliance, HPCL, BPCL, Indian Oil, ONGC, and GAIL. The next sector is the aviation industry. With the reduced ATF prices, the companies that will benefit will be SpiceJet and Indigo. Now, if we see the fertilizer and chemical industry, India imports ammonia, urea, LNG from Middle East. As the war will cease, the companies that will recover from the lows will be GNFC, Chambal Fertilizer, RCF. In the gold and jewelry sector, gold is imported from the Middle East, and also the diamonds are imported from this region. The finished goods, that is the jewelry, are exported back to other countries, and the companies who will benefit will be Titan, Rajesh Exports, and others. Then if we look at the construction industry, L&T will be the most benefited in this category, as 40 to 50% of the company's revenue comes from this region. So now let us keep the fingers crossed and wait till the right signals for the ceasefire. And let me tell you that this video is created for educational and information only. Viewers should conduct their own research or consult their financial advisors before making any investment decisions. Thank you. See you soon in my next video. Till then, goodbye.